the business here. We're doing it live and doing more at 4 weekday afternoons, right after Guy Benson at 3 and just before the 790 KBC News Blitz with Randy Wang at 5. Mottek On Money. We are live on the air, 790 KBC, streaming live online worldwide at kbc.com. And yes, the on-demand Mottek On Money podcast, kbc.com, Apple, iTunes, YouTube, and all your favorite podcast platforms. Another wild ride today for the market. Stocks finishing sharply lower in the final analysis here following another seesaw session, another wild roller coaster ride with the S&P 500 and the Dow extending declines to a fourth session in a row. This after the White House confirmed the president is still set to impose 104% tariffs on all Chinese imports starting tomorrow. We'll have extended coverage on the big news of the day here. I'll be joined shortly by veteran market strategist Paul DIETRICH, Chief Investment Strategist at WILBUR Securities, headquartered in the heart of downtown Los Angeles. Also this hour, we'll cover the latest China news with the tariffs set to kick in with veteran China expert Gordon Chang, author of numerous books, including Plan Red, China's Project to Destroy America, among others. He's also a distinguished senior fellow at the Gatestone Institute. And how all of this is impacting the Main Street economy here in Los Angeles. We'll get the ground level view from Mark WILBUR, Chairman of Employers Group, former chair and founding member of LA BizFed, and former Associate Dean of the USC Marshall School of Business. At the closing bell, the Dow down 320 points today. The S&P 500 down 79. Both the Dow and the S&P 500 were down for 4 consecutive trading sessions now, and they're seeing their worst four-day percentage drop since March of 2020. That, of course, was the start of the pandemic and when the whole global economy was shut down and a bear market began. The NASDAQ composite dropping 335 points, selling at 15,268. Earlier, we did see a relief rally today. It was looking pretty good in hopes the president might ease up on tariffs on major trading partners. The Dow was up by nearly 1,500 points early on, while the S&P 500 and NASDAQ pumped more than 4% this morning before erasing all of their gains in the afternoon. We did see the S&P 500 now rack up its largest percentage gain since 2008, or its largest blown percentage gain since 2008, that is, after rising big, then popping, while the NASDAQ saw its worst blown gain in more than 40 years. The White House press secretary today said country-specific tariffs of up to 50% will take effect tomorrow, right after midnight Eastern time as planned. So much for a turnaround Tuesday today. Let's get the latest here right off the bat. We have a veteran market analyst with us, and that is Paul DIETRICH, who's now Chief Market Strategist at WILBUR Securities in downtown Los Angeles. Paul, thank you very much for taking the call here this afternoon.
Thank you, Frank.
A lot to unpack here, but first of all, give us your reaction to that big sell-off last week on the tariff announcement, and fast forward to today on the eve of tariffs focused on China and the rest of the world.
Well, it's not surprising. I mean, basically, the history of tariffs, going back to William McKinley and the Smoot-Hawley tariffs that really exacerbated the Depression. This is not anyone who's studied tariffs, any country that's actually implemented them on any significant level has been poorer in the next 3 years, 5 years, and 10 years. There have been a number of academic studies to show that. Same thing is going to happen now. One of the things that Wall Street investment firms and serious institutional investors, they hate chaos, and no one can actually look at Apple or any company out there and predict with any kind of certainty, which they could before, what the earnings are going to be like because of the effects of these tariffs. I mean, we haven't had massive tariffs since 1930. That's almost 95 years ago. And so there isn't a lot of, real data in the world to see how this is going to affect earnings. So everyone is literally, if they have any brains whatsoever, they're pulling in, getting down into a fetal position as an investor and just trying to protect what they have.
One thing that's been certain lately is volatility. The VIX index had that big spike yesterday after that other big spike the last couple of days at the end of the week last week, and today the VIX up 5% here after another very wide swing during the course of the trading day. Are you betting on more volatility, and what about the use of the volatility index in this environment?
Well, I don't know that I'm betting on more volatility. The next few months, there's going to be enormous volatility because, as I said, no one knows what's going on and what the effects of this will be. One, we don't know what President Trump is really going to do. We know what he says he's going to do as of midnight tonight. We also know that he's in negotiations, so things could change. And no one, and as I said, there's no analyst on Wall Street can accurately tell you what earnings are going to be like 6 months from now, a year from now. Companies are downgrading their earnings expectations like a stampede. And so there's going to be more volatility, but if you try to play this volatility in the market, it's just like gambling because no one knows what's going to happen. And it's like, betting in a slot machine. The best thing to do is hunker down, protect yourself, and that's the key here.
And you mentioned the fetal position as well. That just to play it safe. What about gold here in all this? Gold has been holding up fairly well given the market sell-off we've seen, hovering at still around 3,000, up $7.90 here at the moment. Our favorite number up at $7.90. You're on 790 KBC, up $7.90 to $29.98 and change. What about gold and silver here, just below 30? I see copper, which the old line is that copper is the only metal with a degree in economics, so-called Dr. Copper, which is very economically sensitive, and copper has taken a hit. Give us your thoughts about the metals here.
Yeah, gold is what I would look to. In the money that I manage, I have about 25% in gold, and gold is something that always does well, one, in a recession, and it's also doing particularly well now as people are getting worried, and you're going to see more worry come between now and June on the U.S. dollar. I mean, we've got a big debt ceiling raise where Congress has got to come to a big vote in June to save us from defaulting on our U.S. government debts. I'm sure they'll come through because the alternative is catastrophic. But people are starting, investors globally as well as here in the United States, because of our massive deficits, and we will have, if nothing changes, about a $2.5 trillion deficit this year, and Republicans have got to raise the debt ceiling by about $2.5 trillion. And the only way they're going to do that, they say, is if there's massive cuts in spending and a massive pay down in the in the deficit. And the only way that can happen is for Trump to keep the tariffs on, because the government estimates that they will bring in $600 billion. But all of this, the bottom line is people are starting to get worried about how reliable we are and how reliable the dollar and the treasuries are. And you're seeing foreign countries starting to pull back massively. Not only Europe, not only Japan, certainly China, of winding down a lot of their treasury buys, and they seem to be going into gold. And that's one of the reasons why gold has done so well this year. I'm always a little worried about silver. Silver is there. There's still some groups and big players who kind of control the movement of silver. If I were just looking for a defensive investment, I would look at gold. Copper. If we go into a recession, copper will go down, simply because it's mainly used in industry, and manufacturing will pull back as it does in every recession, and especially if we have a global recession. I expect if we go into a recession, it will be a global recession. And so copper would not be my favorite investment.
On the question of recession, some people think we're possibly in a recession now. What is your view on this economy? Are we in a recession? And if we are in one, will it be bad? Will it be vicious or short term? Give us your view on the economy here, and also, P.S. Is this bear market going to be vicious, or will this also be short term?
Well, one of the things, I don't believe we may be in a recession, as BlackRock and several other, Jamie Dimon, several other people think that we may. The key thing is that I'm waiting for the official GDP figures. If the first quarter we have negative GDP growth, we're almost assured to have second quarter negative GDP growth, and that's kind of a shorthand for a recession. So it's possible, but I wouldn't want to say for sure that we're in it right now, but that could change. But the thing is, people just don't know. We know that earnings are going to hit. I mean, when we put a 54 or 104%, as President Trump is doing with China right now on China, he's added another 50% today, so it'll be tariffs of 104%. But even those countries where you got 25, 30%, that's more than the profit margins of all those companies that are selling us goods. They have to raise prices. And when they raise prices and the American people start paying for that, they're going to cut back in other areas. People have already started. We're seeing it in travel. We're seeing it in airline bookings. People are already starting to pull back on spending. And if history is any guide, then after the pullback in spending, and as companies are trying to keep their earnings up, they're going to have to start letting people go, and you start having large amounts of unemployment. And that's just, as the night follows day, that's what you're going to see, and that exacerbates a recession. I have written about going into a recession, that I thought it would come at some point. It's part of the natural business cycle, and it's been 15 years since we've had a recession. And normally, historically, since 1950, we've had one every 6 to 9 years. And now, because we printed so much money in deficit spending and stimulus money that we pumped into the U.S. economy since COVID over the last 5 years, that's pushed off the recession, but it hasn't basically invalidated the business cycle, which, calls recessions are part of that natural business cycle. I thought it would be, without the tariffs, I thought this would be a relatively mild recession. And I think a lot of other people did too. A soft landing is just basically not going into a recession, but being close to it. Now, with what the hit to earnings and the tariffs, I think it could be more severe than not.
On there live with Paul Dietrich, Chief Market Strategist at Wedbush Securities, headquartered in downtown Los Angeles. One silver lining in all this for consumers, and certainly one thing that has been driving inflation in recent years, is the price of gas and oil. And it looks like at least that's coming down with the price of oil the lowest it's been in years today, as of today, cracking below $60 a barrel, and right now hovering at around 58 and change. What do you see about gas and oil prices here and the energy names on Wall Street?
If we go into a recession, if you just look at the history of recessions, from 2001, 2002 dot-com recession, 2008, 2009, and also the COVID recession, when people start pulling back, they stop traveling. There's air travel is curtailed. People don't drive as much, and historically, oil, gas, all of those things have gone down. And I always like, if you're going to play energy, I always like utilities because, utilities can use any form of energy, and because they're regulated by state governments, I used to be a state legislator and I served on the utilities committees. They get to add, sometimes up to 15% profit on all of the sources they use, and they can take sources from wind, solar. They can take it from anywhere, and then they're kind of guaranteed a 15% profit. So if you're investing in energy, rather than investing in the companies that you associate with oil and energy, I always like utilities, and they've done very, very well, and they've held up very, very well during this downturn.
All right, turning to something I know you're not fond of at all, to put it mildly, and again, we talked to the biggest fans of crypto here as well as the harshest critics. What are your thoughts here about how cryptos have performed in all this? We see Bitcoin taking a tumble here this afternoon, down about $2,500 to $76,700 or so.
The Sean Ryan Show presents Peak Points. Get timeless inspiration from the very best of The Sean Ryan Show.
September 11th happens. What is the first thing that went through your head?
September 12th, I'm going back in the military.
Talk about being recruited by the cartel. How do you cope? Just learning how to find a new normal. One of the most tragic events in American firefighter history.
You know what comes after.
You have this beautiful life. You have these horrible experiences, yes, but you can do something with them for the greater good.
The Sean Ryan Show Peak Points. Follow and listen on your favorite platform.
Well, it puts all the people who used to say that crypto was a safe haven when the market started to tank or going into a recession or anything like that. It shows that they were all wrong because it hasn't held up. And as people start getting nervous, and they start looking at what is it that crypto holds as an asset, and they start looking at it carefully, they start to realize that gold is a much better place to put your money. And I think treasuries, if you want defensive investments, treasuries, cash, gold, and defensive equity investments are so much better than crypto.
Even the boring bond market has seen quite a bit of volatility. I see the yield on the 10-year note is back up to 4.30%. So what is your thoughts on the bond market here at the moment?
Basically, the bond market is telling us that inflation is coming back. And no matter what any government official tells you, that these are just a one-time, tariffs are just a one-time charge, and that it won't cause inflation, I don't find that credible. And what you have to look at is that, not only are you paying more for groceries that are imported, which many of them, if not most of them, are, then when people have to travel and they have to buy a new truck and they have to pay massive amounts more for the new truck because the steel and the parts that come from overseas, there is a follow-through effect on all of this that's going to drive inflation up. And every economist who's doing studies on this and who have looked at this in the past, believes that inflation is going up. Right now, we're looking at, 5 to 6% in the next year or so, and people were upset at 5 to 6%, a year or so ago, and I think they'll be even more upset if we go back to it because of the tariffs. And that's what the bond market is saying, and I would listen carefully to the bond market because it's telling us where inflation is going.
And last but not least, I see stock futures pointing lower ahead of the opening bell tomorrow. Dow futures down about 400, NASDAQ futures down about 250, S&P futures down about 66. What do you think is going to happen tomorrow?
We'll probably have a down market. I think we're going to see massive volatility. At some point there'll be a couple of up days, but by and large, as I kind of mentioned, I think President Trump, he's kind of boxed himself into a corner in that, we're all talking about trade agreements and maybe he'll lower a little bit for Japan and South Korea, but he's obviously raising a lot with China, our biggest, or one of our biggest trading partners. The problem is that he cannot give up the revenue because of this vote that's coming up in Congress in June to raise the debt ceiling by $2.5 trillion, or we're going to default. And he's got all of these, he's not going to get any Democratic support. He's got all of these Republicans who said, we're not going to sign it unless you can show us that you're bringing in a massive amount of money. And right now, with all the tariffs, $600 billion is what's projected to come in, and he needs that money. And this will be, make no mistake about it, this will be the largest peacetime tax increase on consumers in the history of the United States. We've had a few big tax increases during wars, but this will be the largest peacetime. $600 billion is an enormous amount of money to bring in through a tax. And this is a consumer tax. It's a sales tax on purchases of things that are made outside the United States, which almost everything is, to one degree or another. And, he really can't say that directly to the people that this is the way I've decided to tax you. I don't want to tax income taxes or corporate taxes, so I'm going to put a sales tax on. The nice thing about sales taxes is that everybody has to pay it. Illegal aliens pay it. Foreigners who are traveling to the United States, they pay their fair share. It's the broadest tax where the most people pay it, but nonetheless, it is a tax, and I think he's going to be limited as to how much he can cut back on these tariffs. Simply,
Paul, we'll have to stop there. Paul, thank you very much for that thorough assessment. As always, we do appreciate it. We'll continue to follow this closely with you. That is veteran market strategist Paul DIETRICH, chief investment strategist at Wedbush Securities, headquartered in downtown Los Angeles, live with us here on Mottek On Money on 790 KBC.
790 KBC, welcome to Spasmatics, coming to the Canyon in Agoura Hills on May 3rd. Tickets on sale now at AXS.com. Right now, caller 9 wins at 1-888-795-2222. You can get a pair of tickets to the show if you're caller number 9. Call now, 1-888-795-2222. Tickets furnished by the Canyon, where music meets the soul. Another rough day for the stock market and a volatile session. We saw an epic turnaround today on the downside. The S&P 500 was up about 4% during the trading day. It came in for a closing loss of nearly 2%. The Dow down 320 points at the bell. S&P 500 down 79. NASDAQ down 335. Markets nervous about tariffs set to kick in after midnight back east. China, especially hard hit with tariffs set to kick in at 104%. We'll talk about it. We'll talk about it with China expert Gordon Chang coming up live here in just a moment. But first, the latest news on 790 KBC. Mottek On Money continues here, 790 KBC. Another wild ride for the financial markets and nervous time on Main Street. We'll be talking live with Mark Wilbur coming up here later this hour. And also, we're watching what's happening with China. This is the big news today. Stocks finishing sharply lower today following another volatile trading day with the S&P 500 and the Dow extending their drops to a fourth session in a row. This after the White House confirmed President Trump is still set to impose 104% tariffs on all Chinese imports as of midnight tonight back east. Our extended coverage continues now, and joining us live is Gordon Chang, China expert, author of numerous books, including his latest, Plan Red, China's Project to Destroy America, as well as the coming collapse of China. As many others, he's also senior fellow at the Gatestone Institute and on X, formerly known as Twitter, at Gordon G. Chang. Gordon Chang, thank you very much for taking the call. Looks like President Trump's still confident about the strategy, giving a speech a short time ago praising his what he called explosive tariffs, saying they were vital for his vision of the U.S., and this coming just before the administration is set to impose 104% tariffs on some Chinese products. I see here, I'm reading the latest headlines, Beijing refusing to meet President Trump's deadline to withdraw its own retaliatory tariffs on the United States. Give us your reaction to these late-breaking news developments.
Well, the economically rational thing for Xi Jinping to do would be to come to terms with President Trump quickly. And the reason is that China does not have any ammunition in this trade war. It is the smaller economy. It is less than two-thirds the size of the U.S. one. But more important, it is the trade surplus country, with the merchandise trade surplus against us last year of $295.4 billion. That was up 5.8% from 2023. Trade surplus countries just don't have the leverage. But the problem for Xi Jinping is that he's configured the Chinese political system in a way so that only the most hostile answers work. He can't be seen to give in to President Trump, so he could very well take China off the cliff, because there is just no help for them if they can't access the U.S. market. And they can't with 104% tariffs, which in some cases are 115%.
Is China going to go off the cliff with the flag flying then? And at what point will they say uncle? And you think that'll happen?
Well, there's a number of things that could happen. As long as Xi Jinping is in control, he is determined to pursue his course, because he believes that the United States is finished as a world power and that China can take over. And his vision is very different from what reality is. But the point is, I think that he has an ideological view that is not going to allow him to be flexible. And the question is how long he remains in power, because there are signs that there's a number of very unhappy people in Beijing right now, some of them in uniform.
President Trump calling the tariffs somewhat explosive and feeling very confident, speaking about what's happening at the moment and trying to bring manufacturing back here, trying to get China to stop allowing fentanyl to get into the United States. Do you think the strategy is working so far?
The Sean Ryan Show presents Peak Points. Get timeless inspiration from the very best of the Sean Ryan Show.
September 11th happens. What is the first thing that went through your head?
September 12th, I'm going back in the military.
Talk about being recruited by the cartel. How do you cope? Just learning how to find a new normal. One of the most tragic events in American firefighter history.
You know what comes after.
You have this beautiful life. You have these horrible experiences, yes, but you can do something with them for the greater good.
The Sean Ryan Show Peak Points. Follow and listen on your favorite platform.
Well, with regard to China, it is working as best it can. And, President Trump's very powerful, but one of the things he can't do is he can't force Xi Jinping to talk to him. And so I think China's going to go its way until it comes to its senses. And then I think will take a very long time. As the Commerce Ministry said just a few hours ago, China's going to see this to the end. And it could very well be the end of the communist regime, because they have an export-dominated economy. That's actually the only way that China can rescue a pretty grim situation, because Xi Jinping has turned his back on consumption as the fundamental basis of China's economy. So if he's shut out of the world's biggest market, there's just no hope for the Chinese economy.
What about Tesla in China? A lot of attention focused there, as well as Tesla overall. What are your thoughts about what's happening with Tesla in China and the situation with Elon Musk and his role at the moment?
Well, China's making sure that BYD, which is a competitor to Tesla, takes over the market, and BYD is doing very well. Clearly, China has a lot of leverage over Musk because he has his gigafactory in Shanghai. But as Xi Jinping has made clear with other car companies and with other foreign companies, only local companies and generally only state-owned enterprises will be able to prosper in China. So Elon Musk's days in China are numbered. He may have several more years, but I think that essentially Xi Jinping is going to make life very, very difficult for the world's richest man.
What do you think is going to happen tomorrow with these tariffs kicking in? Will somebody blink between the U.S. and China?
Well, I think that Trump has made it clear that he's not going to be the one to blink. And the reason is, with those 50% tariffs, Trump was saying to Xi Jinping, I hold all the high cards. I'm going to just match every raise that you have, and I'm going to overmatch you. Now, Xi Jinping is the master intimidator. He has not run into somebody like Donald John Trump. And I think that very well, neither of them may blink, but it may mean that the Chinese economy fails. Remember, China is not growing at all right now in all probability because it's in a deflationary spiral downwards. And it's having its 2008 crisis at the same time. And that while all of this is going on, Trump is shutting off the world's largest consumer market to most Chinese goods. This is a very bad story if you're the leader of China.
Veteran China expert Gordon Chang, author of numerous books, including author of Plan Red, China's Project to Destroy America, and many others. Also distinguished senior fellow at the Gatestone Institute, and on X, formerly known as Twitter, at Gordon G. Chang. Gordon Chang, wish we had even more time. Thank you very much. We'll be watching these developments very closely with you tonight. Thank you very much for joining us live here this afternoon.
Well, thank you, Frank. I appreciate it.
Thank you very much. And out to the freeways now, 790 KBC. Mottek On Money continues, 790 KBC. President Trump standing firm on tariffs, including the 104% tariff set to kick in on China at midnight tonight back east. We've seen a very nervous stock market with another pullback today and nervous time on Main Street. Let's get a ground-level view of what's happening here in Los Angeles now with Mark Wilbur, who joins me live now, chairman of Employers Group, former chair and founding member of LA BizFed, Los Angeles Business Federation, and former associate dean of the USC Marshall School of Business. Mark Wilbur, thank you very much for taking the call here this afternoon.
Yeah, it's great to be on, Frank. Thanks for having me.
Yeah, I've been doing a lot of talking, so my voice is a little bit strained. And I'm sure you've been having a lot of conversations, too, with a lot of people in the business world asking you what's going to happen next year. And give us your view of things here with this important tariff, the big tariff set to kick in tonight.
It's interesting. I was listening to Paul Dietrich from Wedbush, who was on earlier, and it's interesting. People have different perspectives on the tariffs. There's a broader perspective here that I encourage people to think about because it's been a very unlevel playing field for the United States. Take Trump out of the equation. Just if you were to walk in and assess the United States with other countries, it was a very, very tilted table, not in the favor of the United States at all. And what is trying to happen here with the Trump policies on these tariffs is that we're trying to level that playing field. And you have people just making up numbers. I mean, the $600 billion tax increase is hooey. That's not true. It won't happen. Because the fact is that we did this under the first administration with Trump, where he did some tariff increases, and they don't come back in at a 1-to-1 on taxes on those products. Because you know what, Frank? Those products still have to be able to be sold here. So, you're not going to go take something, a widget that costs $10 and now make it $40 because that's a whole part of the tax on the tariff. It doesn't work like that. So they still have to be able to compete. So, yes, there's potentially a slight increase. But actually, we found during the first administration, there was very little increases, and that they actually ate it on the other side. The producers did. So, I'm not sure that's all cases, but I'm just saying that there was a multitude of examples of that. So, It may not be the big, giant inflationary thing that people are talking about. And plus, you've got it. There's one other thing I just want to talk about real quick, Frank, and that is, and I know we got a short time, but is the trade deals. I mean, renegotiating our access to markets is essential. I mean, everybody's allowed to dump their products in the United States. We don't tariff very much. You know, it's a competitive environment. We like open markets. But yet we can't ship our stuff hardly anywhere. I mean, not only do we get tariffed, I mean, big tariffs, Japan, 48%, Vietnam, 90%, China, 67%, India, 52%. So we can't actually send stuff elsewhere because they purposely make it so egregious for us to ship our products there that we can't actually do business. And so he's trying, part of this is to quickly get countries to the table, which I heard yesterday, there's already more than 70 countries that have already reached out and are getting in line to renegotiate their tariff situation, which is smart. And because once that gets sorted out, then it goes away. The EU has already said they're willing to do 0-0 on trade rate for, all industrial goods. I mean, that's extraordinary. So
those are all excellent points. And
yeah,
one thing that's lost in this, it's obviously very important to Los Angeles, especially because L.A., believe it or not, as you well know, is the largest manufacturing region in the United States by far.
Yeah.
So President trying to bring manufacturing here to the U.S. Among the manufacturing people you've talked to, are they enthusiastic about this idea here, bringing more manufacturing to Southern California?
Oh, my God, they're so excited about it. And this is nationwide, Frank, because there is no better productivity than the American worker. I mean, the work ethic here and the, safety in production and everything else that goes into it and the quality of what we produce is at the very top level and anywhere on the planet. And so, yeah, they're very excited about the opportunity to bring manufacturing in. And you've seen the billions, if not trillions, of already dedicated companies saying, we're going to now produce here. And so I think we've only hit only the beginning wave of that, but it's going to become a tsunami of companies moving in here because he's going to make it a tax advantage haven and he's going to make it advantageous to produce in the United States. And we have to have a middle class, blue collar manufacturing, country. Otherwise, we're just left in a service economy, and that's not healthy for us.
Mark, thank you very much for taking the call. We'll continue to track all of this closely with you. Thank you very, very much for joining us live here. That's Mark Wilbur, Chairman of Employers Group, former chair and founding member of the LA Business Federation, Los Angeles BizFed, and former Associate Dean of the USC Marshall School of Business. Live with us here on Mottek On Money, 790 KBC. We see stock futures pointing lower ahead of the opening bell tomorrow after another wild ride today. The Dow closing down 320 points, the S&P 500 down nearly 80, and the NASDAQ Composite down 335. The yield in the 10-year note back up to 4.30%. Stay tuned now for the 790 KBC News Blitz with Randy Wang, and I'll be back with more at 4 tomorrow afternoon right here on Mottek On Money, 790 KBC.
It's part sports.
We have football on the brain.
Part pop culture.
Dennis Leary.
True or false? You refuse to wear a glove with Mickey Mantle's signature on it for the movie The Sandlot.
The Red Sox blood, the Bruins blood, they run deep.
Add in the best celebrity interviews.
Robert De Niro here on The Rich Eisen Show. How are you, sir?
Just got over a 24-hour virus.
The antidote is to appear on The Rich Eisen Show.
There you go. I would just have done it earlier.
And you've got The Rich Eisen Show podcast.
There is a medicinal quality to appearing on this program.
Follow and listen on your favorite platform.